Hey everyone, it's Paul and Ian. Thanks for having me on the Iancast again.
Yeah, not a problem, Paul. Good to have you always.
It's been a while, and
Yeah,
there's a lot that's been going on. And
yeah,
we were talking about what we should do this Iancast on. And truthfully, there's stuff on all the usual things: Tesla, Bitcoin, cannabis, pot,
yep,
and then the market. And I figure we can just sort of go through this and let's go through really the market first, because I'm
yeah,
sure a lot of people will have seen what the market did today. We're recording this on Thursday and be like, hey, is this for real? Is this
yeah,
for real? Because we have seen we've seen a couple of times where the market's gone up and then gone straight back down
yeah,
and straight
exactly.
back down. And we were talking before this about the fact that there's been a lot of signals, even as the market has been going down, that the buyers were coming back in.
Yep, yeah. I personally believe that we're getting very, very close to the bottom. Of course, calling a bottom is one thing, but I do think that we are very close. Even in like the worst part of 2008 and the worst part of 2001 after 9/11 and in the Great Depression, the market has never fallen this fast before over as it has over the past couple of weeks. This is like unprecedented. It is because a lot of people are really uncertain about what's going to happen to really the global economy because of all these shutdowns of businesses and things like that. But we believe that our kind of stocks, this is really going to separate the old world from the new world. So we're seeing a lot of old world stocks. Like if you look at the Dow versus the Nasdaq, there's such a big difference. The Nasdaq has been up the past couple of days, or it rebounded a lot yesterday afternoon, Wednesday afternoon, and was up today, which is Thursday. And meanwhile, the Dow is back to where it was, or at least it was back to where it was in 2016. The Nasdaq has not gotten back down to that level. And it's because these old world companies in the Dow, people are starting to realize that these are kind of the companies of yesterday, and they're shifting into the companies of today. We saw a lot of online stocks, e-commerce, companies like Zoom, which we use for video conferencing, that are going to be used in the workplace too, just having really, really strong days, even during this crazy market sell-off. So that's kind of what we're seeing in the market. And it's like, again, it's really the differentiator. These companies that are falling, like a lot of companies, like even Boeing, like hundreds of billions of dollars, ExxonMobil, are falling like 60-70% in the matter of a few weeks. But we believe that our stocks, the stocks of tomorrow, like semiconductors, solar, even home building stocks, e-commerce stocks, are going to be the ones that really lead this rally back up. So we're well prepared in what we have in our portfolios for this, for the coming rally once the market does bounce back.
Yeah, completely. I mean, when I first started talking about new versus old, people would ask what that is. However, in a simple way, I mean, you talked about the market bottoming out. I mean, the truth is that the S&P 500 has too much of the old in the top 20, which is the vast majority of the market capitalization. And even companies like Apple and Microsoft, I mean, I hesitate to say that they're the old world, but they
Yeah,
are older
yeah,
than
slower
newer
growth.
companies, and their investor base is also a bit older. Their appeal in terms of both their business models, and while the iPhone is certainly popular among people of all ages, I mean, when the next whatever it is that comes, maybe it's a phone, maybe it's some other kind of device, it's fairly clear that Apple has no innovation going on that we can
Yeah,
see or know about. So it seems like someone else will take that lead. And Microsoft is as well, has been around for a long time, and they too have not really innovated. They've iterated on various things that they have. However, they have not innovated sufficiently to differentiate themselves. And so the S&P 500, the Dow, I feel like people who are wanting to like call the bottom are actually going
yeah,
to miss where the action is, which is in the Nasdaq Composite, which is where the companies of the new, for the most part, there are a few on the New York Stock Exchange. However, the companies of the new world largely trade on the Nasdaq, and even like the Nasdaq 100 has a lot of old world companies in it, like Delta Airlines.
Yep.
and some other companies where the Nasdaq was just simply in a competition to try and get as many companies to list on the Nasdaq, and they attracted some of these old world companies to list. And so they're large companies for now, and they're in the Nasdaq 100. So even that index is a little bit misleading in terms of like thinking like you're getting tech companies, new world companies. No, which is why the Nasdaq Composite is the thing to watch today, rather than the Dow and
Yeah.
rather than the S&P 500. So I feel like people that are trying to call bottoms on the S&P 500 are going to miss probably the first big part of the move.
Yeah.
And like what's going on today, where today the Nasdaq Composite is up over 2%, and the S&P 500 and the Dow, not much of
Yeah.
anything. And even the Nasdaq 100 did less than the Nasdaq Composite. So that's good from many perspectives. It tells you that the Nasdaq Composite is being supported by a lot of companies. For that
Yeah.
to grow, a lot of small companies have to go, because remember, Apple is the largest company, and Apple did not go up today, or maybe went up just a little bit. I don't remember. I was watching it until a bit later. So that tells you that the smaller companies are leading,
Yep.
led today. And that is a great sign. That's a sign of of that there's a lot of support for a lot of different companies, buyers coming in, bidding it higher. And also tells you there's a new cycle beginning where companies of the old that dominate currently the S&P 500, 1 or 2 years out, what you're going to see is them start to fall down the ranks, and these companies of the new start to push up and start to dominate those indices, where you'll look in 3 to 5 years and be like, what are these companies and where do they come from? And you look
Yeah.
today, they're completely different.
Right. And to that point, back in, the market sell off in 2018, there were two parts to that, one in October and one in December. And we noticed that a lot of our stocks, the smaller, faster growing companies, bottomed out in October, but then the broader indices like the Dow and S&P 500 made a way bigger bottom in December. But a lot of, like semiconductor stocks, for example, pretty much none of the ones that we follow and that we recommend went below their October lows. Even as the market was like kind of crashing in December 2018, they still didn't make new lows. And another thing that we think is really important that is an argument against Apple is the amount of cash that they're spending on like things like buybacks that don't improve the company. Meanwhile, a lot of these smaller companies that are in growth mode, that have really fast growing demand for their products, they are putting as much money as possible back into their business to grow and meet that demand. And a lot of these old world companies are like Apple, buying their own shares of stock with their extra cash, and they're going to be in trouble when that kind of runs dry and people lose faith on their business because they're hardly growing their sales.
Right. I mean, without price increases, Apple would not have rising sales. And so
Right.
all they've largely have done is like lift prices up year after year to keep that. And we exchanged a bunch of stats on Slack, looking at how much money Apple spends on buybacks. And over the last 3 years, I think it was in excess of like 70 to 80 billion dollars since
Yeah, I think it was
2017.
160, at least 160 billion dollars in 3 years.
Yeah,
That
and
they,
then there's
yeah.
also the dividend, which they pay out.
Yep.
And then they're paying, and they used borrowed money for quite a lot of that. So there's interest on the borrowed money as well. And so, I mean, I've gotten actually a lot of grief from people for being negative on Apple in truthfully too early, 2016, which is when their business peaked out in terms of volume growth, in terms
Yeah.
of unit volume growth, in terms of iPhones. And in truth, both Ian and I were a little bit surprised at the strength in Apple stock. Pretty much from October to February, I believe it doubled, or it went up 60, 70%,
Yeah.
something like that.
Yeah. Exactly. And that's why you saw that big rise in the big indices, was because companies like Microsoft and Apple were just going straight up.
Right.
And these are the companies that are, again, buying a lot of shares of their stock. And when you have a company who's doing that, of course, that's gonna be a big boost to the stock price, because they're the main buyer. They're putting so much money into that they can support the price, but that can't go on forever.
No, and and into a moment like this when were a lot of sellers at those prices, it was clear there were no buyers.
Yeah.
And I've been saying on my Bull Profits Daily, which is like the market is currently offering you terrible prices But I was definitely referring to America 2.0 stocks, fourth industrial revolution stocks, stocks of the new, stocks of the old, which, in our America 2.0 video, if you're interested in watching that, it also comes with 2 free reports, which you can keep. If you want, just click on the strong hands above. It will take you to my video presentation on America 2.0, tell you about the reports, tell you about America 2.0, what I believe is going to happen over the next 3, 5, 10, 15 years. Click on the strong hands above and I'll give you a video presentation, tell you about the reports. In that blacklist report, we put Apple in there and we put ExxonMobil in there. And I actually got quite a lot of grief from people because these are the blue chip stocks of the past.
Yeah.
Of the past. And, and ExxonMobil has like really totally collapsed.
Oh yeah, a lot of those oil companies have because the price of oil has collapsed.
Right.
But that just gives kind of foresight into what's going to happen as alternative energy keeps making a bigger market share of the whole energy industry.
Yeah, and I would say, Ian, the one thing where people say, hey, many people want to bet on a bounce on these old world stocks, and there probably will be one at some point in time. Even those look pretty like the demand and supply balance is probably in favor of, like, even if small amounts of money starts to come in, they'll probably bid them higher. However, from our perspective, those would be rallies that you would want to sell into because the long term there, whether it be their business model, their product, or just looking at the demand for their stock going forward, I think that the vast majority of people are going to look at, the vast majority of people probably above, or a certain age are going to look at ExxonMobil and say, well, we can see that the transition from carbon-based energy to a different model is unfolding and the market is starting to price that.
Exactly. Yeah.
Right. All right. So we've done the market and, we probably should we actually think that what we saw today, we are going to actually start to see a sustained bounce. Now, there's no straight lines ever in investing or in any markets. However, given what we have seen, which is that the kinds of companies that are going, that the Nasdaq composite is leading, all of those are indicators that this bounce, in all likelihood, we can't guarantee it, looks like it will continue. But it will continue largely and be benefiting mostly America 2.0 stocks, fourth industrial revolution stocks, the new world. And, eventually that'll probably, lend some support and the old world stocks will bounce as well.
Yep. Agreed.
So let's do some Bitcoin here.
Yeah.
And so Bitcoin also crashed during the panic. We worked out that probably there was a lot of leverage in Bitcoin that people were holding with debt. That's what we figured.
Oh yeah, it's crazy. Like there's this one it's one of the biggest Bitcoin exchanges in the world. It's called BitMEX. And they had this service where they let you buy 50 times margin accounts or 50 times margin Bitcoin. So basically you could buy $50 worth of Bitcoin with $1, and people were putting thousands and thousands of dollars into that. That's just asking for trouble because when Bitcoin goes down pretty fast, that just accumulates all these people that are trapped underwater. They need to put more money into their accounts because it's sold off so fast that their accounts go into a negative balance. They actually owe the company money. So it's very bad, of course, when that happens. This is the same kind of thing that could happen with, oil crashes. So we had that too. And it was kind of this rush to cash across all indices and crypto and oil at the same time, where people needed to make up for their losses, fill back in their negative accounts. And it overspilled from where the problem actually is with oil, Bitcoin, travel stocks, and it flooded the stock market too. So there was all this widespread selling. And of course, people are going to sell the most risky stocks first just because of, proper investment rules or whatever. So that Bitcoin issue really translated into other things, as did the oil crash.
But really, essentially, it was the same thing, which is there was this lurch for cash across all markets, either because people were trying to get genuinely panicked about the coronavirus, or else that they were facing client redemptions, or else they were facing margin calls, or they panicked themselves and they wanted to sell. And panic tends to travel in social circles. Panic transmits itself by person-to-person contact, texting. And once one person sells, they tell another person, feels like, well, he's selling, so I better sell too. And it travels that way. And Bitcoin hit, I believe, a low of 3,800.
It did, yeah. And Bitcoin has, it's like $100 billion market cap. So it's not that big. It's very, very small when compared
Right.
to any other group of assets. So when Bitcoin does that, it's going to trigger a big sell-off, like a lot of Bitcoin being sold at one time. And now we're starting to see people move back into it. It's almost twice as much per coin as it was at the bottom of that collapse already.
Right. I mean, and we're still bullish on Bitcoin. We still
Yep.
think that Bitcoin could see, in fact, I believe actually because of the collapse, the effect of the halvening in May is going to be much more dramatic because Bitcoin, by collapsing ahead of it, has probably concentrated into people that were true believers in it, that,
Yeah.
they were like, hey, I'm going to buy more. I mean, it's collapsing, but I'm buying more. And the people that own it and didn't have margin in it, well, they didn't sell anything. So it's concentrated now into, what I call strong hands, people that
Yeah.
really they're like, I am not selling this. I'm waiting for it to get to 50,000. I'm waiting for it to get to 100,000. I'm waiting for, Tim Draper says, I believe 250 to 400,000. He's got, price targets. I totally believe it can do that going out 1, 3, 5 years. So, I mean, a lot of these trades, they'll test you emotionally and, and they test you financially as well, in the sense that if you take easy solutions, well, then you tend to have problems during moments like this. However, with the Federal Reserve doing what it's doing, which is cutting interest rates to zero, flooding the market with liquidity, the U.S. government, setting up not just for one piece of legislation, but a series of legislation
Yeah.
to send cash into the economy. I believe that, as some of that money will also go to Bitcoin for sure.
Yeah, I agree.
For sure.
Definitely.
Yeah.
And like you said, the people that are buying in now are the ones that really believe in it because, a 50% crash in one day is going to scare out a lot of people.
That's right.
And most of that Bitcoin that was, that's currently out there in the world was already being held in accounts for more than a year without being sold. So only a small fraction of Bitcoin is actually being traded right now. And that's another reason it can crash so fast, because there's so few, it's so scarce that when a lot of people sell, it has a bigger effect.
Right.
So that's another thing that Bitcoin has going for it. Most people that are holding it are, holding it for the long term. And then more people who want to hold it for the long term are buying in at these really low prices.
Right. Well, I mean, the strong hands moment is really where there's largely no sellers, which is why just as rapidly as it dropped, it's just jumped now from 3,800 to something like 6,200.
Yeah.
That's because there's no Bitcoin available to buy. So
Yeah.
this is the market action that we always talk about. In other words, buyers and sellers, demand and supply balance. And right now, the balance has shifted in terms of there is no supply. And as even for small amounts of demand come in, they are forced to bid Bitcoin higher. Now, we believe that this is going to continue to happen. And then imagine the supply shock at the halvening,
Yeah.
where there is no new Bitcoin. I mean, so, half the amount of Bitcoin. And what that will tend to do is actually lift the amount of demand that comes in. And as that price rise starts to lift, more and more people will want in. And now you will see a wave of demand really just flood into Bitcoin. How far up could it go? Well, we will stick to our original predictions, which is like I felt that into the halvening we would see a new high, and I still believe that. And Ian, you've said that you felt that by year end we would be at 50K,
Yep.
50,000. And I feel we have a strong shot at that. And in fact, everything that's happened makes it more likely, not less likely, that any of that.
Yeah, I mean, before the last halving, Bitcoin had a sudden drop where it fell 40% in a day, and that was like right near the bottom. So we went back to the bottom, or close to it, 3,800. I think it bottomed out around like 3,100 before.
That's right.
So this kind of stuff is not uncommon anyway. And now that it's so scarce and it's going to get more scarce, there's way more reasons for it to go up from here than down.
Right. Okay, so let's do cannabis,
Yeah.
because these stocks have gotten shelled, demolished, destroyed,
Yeah.
crushed, completely
Yeah.
crushed. Let's do cannabis, because we've gotten a lot of questions from readers on cannabis. Let's talk about cannabis.
Yeah, so this is another situation where you have kind of collateral damage to a sector that really hasn't had anything bad happen to it recently. Of course, there was some issues later last year where some companies realized that they had gotten too far ahead of themselves with, making acquisitions, trying to do too much at once, too much production, trying to set up too many sales at one time. They had to kind of slow down their business. That was already accounted for. Now we're just seeing, some of these pot stocks are trading for like what they have in the bank in cash, like one and a half times that, which is really like bankruptcy level valuations. So it's kind of what I really do think it's kind of ridiculous, the prices that these stocks are trading at. Very, very good opportunity to buy long term. And, American companies are thriving as they have been the whole time. One of the companies, Curaleaf, just made a big acquisition. Cresco, which is another American company, just announced that they're keeping their stores open. And so there's still huge demand for marijuana, both recreationally and medicinally. That's not going to slow down long term. And I think that these companies that are being valued so low are going to survive through this and not go bankrupt like a lot of these stock prices are already pricing in. So great opportunity to kind of catch the market where it's way overreacting and where it's really what I believe it's wrong, just downright wrong on these stocks to be valuing these companies at this low of a level.
Right. And I felt like, we got caught ourselves into where companies were willing to grow at any price. I feel now that the demand and supply balance on cannabis stocks, spot stocks, marijuana stocks is definitely in our favor. In other words, they've like gotten crushed, destroyed so much that once again, they sit with people that are the true believers, people who understand the companies. They're the only ones that are willing to buy into this kind of volatility. And also, on a product basis, the social distancing that we're now practicing because of the coronavirus panic that's going on is actually increasing demand. Yeah, I saw a tweet by somebody where they showed a line in California, and the person said that the line was longer than it was when it was first legalized. So just imagine, the line is longer than when it was first legalized. So I feel like, this is going to create like actually a huge surge in demand. And what we'll also do is it will pressure other governments to be like, hey, we need to just like pass legislation, make this like, something that's national, which is that crises and panics, I've been telling our readers, tend to sort of really accelerate change. And for sure, we are seeing a lot of that happen right now as we speak in so many different ways. And so I feel like cannabis stocks, they're going to catch a bid pretty soon.
Yeah.
And, they're held by now a tiny group of people that if you weren't going to sell at 50% down, 70% down, 80% down, you are certainly not selling here.
Yeah. I mean, the treatment that these stocks are getting is what the banks got in 2008. And the pot stocks aren't going to have to be, bailed out by the government. They're not anywhere close to that level. Their business is fine. Their growth took a hit because, like you said, they're not growing at any price anymore. They're doing something even smarter, which is going to help them in the long run, bring in more demand in the long run. And the prices right now are super low, and it's a very, very good time to buy.
Right. 100%. Yeah. So we've done all the usuals. The last one is Tesla.
Yep.
So Tesla, so stock's given back pretty much all the gains after that explosive quarterly release where stock went from, I think I don't know, 180. I don't know where it was. I can't remember where it was when it launched.
Yeah, 180-ish. Yeah.
180-ish launched to about 900 in the space of like a week or something like that.
Yeah.
Yeah, and it's now back to about 350, something in that range.
Yeah. I think it actually closed at like 430 today, or low to mid 400. So yeah, it's already bounced back. Yeah. It was up double-digit % today.
And so Tesla is in some way the iconic stock of the new world.
Yeah.
Very controversial for many people, huge short position in it. People argue, all these things. And just to point one thing out, if you remember, right after the stock went up, and I think at about $600 or so, Elon Musk decided to do a $2 billion offering.
Yeah.
And I think they did, I don't know if they did debt or they just did all equity. I no longer remember. And
I think it was at least partially debt. Yeah.
Yeah. Why would they do that? Well, in hindsight, that was brilliant.
Yeah.
That was brilliant. In other words, they got liquidity in because nobody's questioning whether Tesla's going to go out of business. However, their competitors, Ford, GM, and we're not hearing now. However, Mercedes-Benz, all these companies, they are having serious liquidity issues because car sales are, regular internal combustion engine car sales are in decline because they sell out of showrooms. Number one, they're not set up to sell online, and Tesla is unveiling its Model Y, which goes right at the heart of the most profitable segment for the internal combustion engine, ICE makers, right at their
Yeah.
heart. That's their
Yeah.
most profitable segment.
Well, yeah, SUVs are the most popular group of automobiles in the world. So the Model Y is going to be a big game changer for them, just like the Model X was, or the Model 3. And then, they've got the Cybertruck on
Right,
schedule to come out next year. Pickup trucks are also huge in the U.S.
right.
Those sales, they had over 250,000 pre-orders for
Oh, they've
that.
got more than that. Somebody
Oh, yeah.
calculated that they estimated it's in excess of 500,000 pre-orders.
Wow, yeah, yeah. I mean, there's going to be huge demand for these cars,
Yeah.
unquestionably.
So I mean,
And
it's so much of this, Ian, is like really the old world versus new world, America 2.0 versus having come up with a way to refer to non-America 2.0. It's definitely working out pretty much as we had anticipated and thought.
yep,
Yeah,
yeah,
I feel like we're actually on the cusp of where there's an America 2.0 bull market, and the others will sort of limp along a little bit, but it's our stocks of the new world, America 2.0, fourth industrial revolution stocks that are going to lead.
yeah,
Yeah.
yeah.
So that's, I think, like we've covered it all: market, Bitcoin, cannabis, Tesla. Anything else we should share?
I think we pretty much did the whole roundup. Yeah.
We took the whole roundup. All right, Ian. Well, thanks for having me on the Iancast. You want to go say goodbye first, and I will end with my traditional wave goodbye.
Yeah, everybody. I hope you have a great Friday. I hope you have a great weekend. And remember, the market is going to get better, even though, when it takes a sharp drop, hard to imagine it going back up. It's going to go back up. So relax this weekend. Don't worry about it too much and enjoy your weekend.
And this is Paul saying bye.